Quick question. Are you invested in generating passive income from your investments? Have you heard about dividend stocks? If not, you are in the right place. In today's video, we'll be discussing the top 10 highest yield monthly dividend stocks that you want to invest in for 2023. But first, let us define what dividend stocks are. Simply put, dividend stocks are stocks that pay a portion of their earnings to shareholders on a regular basis, usually in the form of cash payments. So, why are dividend stocks so appealing? They provide investors with a steady stream of income, regardless of the stock's performance in the market. Plus, investing in dividend stocks can also be a great way to diversify your portfolio. So, without further ado, let's explore our list of the top 10 highest yield monthly dividend stocks. But be sure to watch until the end to see everything we have in store for you, including some crypto picks. Number 1. Ellington Financial Incorporated. Ellington Financial Incorporated, or EFC, is a public traded financial company that specializes in mortgage-backed securities and other investments. As a dividend stock, EFC offers investors a current yield of 9.1%, which is significantly higher than the average yield of the S&P 500. The company has a track record of consistent dividend payments and has increased its dividends for 6 consecutive quarters. Moreover, EFC has a history of strong financial performance, with a net income of $61.3 million in 2020 and a total shareholder return of 38.8% over the past year. The company has also maintained a healthy balance sheet with a debt-to-equity ratio of 0.49 and a book value per share of $19.96. In terms of investment strategy, EFC's management team has a proven track record of identifying undervalued assets and generating strong returns. The company utilizes a bottom-up approach to investing, focusing on specific opportunities within the mortgage-backed securities market. Furthermore, EFC has a diverse portfolio with investments in both residential and commercial mortgage-backed securities, as well as loans and other structured finance products. This diversification helps to mitigate risks and provides a stable source of income for shareholders. Ellington Financial Incorporated is a solid dividend stock with a high yield and a history of consistent dividend payments. The company's strong financial performance and diversified investment portfolio make it an attractive option for investors looking to generate passive income. Number 2. Realty Income, or O. Realty Income is a real estate investment trust that owns and manages a portfolio of more than 6,900 properties across the United States, including retail, industrial, and office buildings. As a dividend stock, O is known for its consistent monthly dividend payments, which have been paid out for over 50 years. Currently, O offers investors a dividend yield of 4.4%, which is higher than the average yield of the S&P 500. The company has a long history of increasing its dividends, with 109 consecutive quarterly increases. In terms of financial performance, O has a strong balance sheet, with a debt-to-equity ratio of 1.31 and a book value per share of $35.50. The company has also shown resilience during economic downturns, with a 98.4% rent collection rate during the COVID-19 pandemic. Furthermore, O has a diverse tenant base, with no single tenant accounting for more than 6% of its rental revenue. This helps to mitigate risks and provide a stable source of income for shareholders. Realty Income is a solid dividend stock with a long history of consistent monthly dividend payments and dividend increases. The company's strong financial performance, diverse tenant base, and resilience during economic downturns make it an attractive option for investors looking for stable passive income. Up in the third spot, we have Gladstone Commercial Corporation, or GOOD. Gladstone Commercial Corporation is a real estate investment trust that owns and manages a portfolio of over 100 properties across the United States, primarily office and industrial buildings. As a dividend stock, GOOD has a current yield of 6.7%, which is higher than the average yield of the S&P 500. The company has a history of consistent dividend payments, having paid monthly dividends since its initial public offering in 2003. GOOD has also increased its dividends for 18 consecutive quarters, with a 2.2% increase in the fourth quarter of 2022. In terms of financial performance, GOOD has shown resilience during economic downturns, with a rent collection rate of 99% during the COVID-19 pandemic. The company also has a strong balance sheet with a debt-to-equity ratio of 1.1 and a book value per share of $23.9. Moreover, GOOD has a diversified tenant base, with no single tenant accounting for more than 4.4% of its rental revenue. This diversification helps to mitigate risks and provides a stable source of income for shareholders. Overall, Gladstone Commercial Corporation is a solid dividend stock with a high yield and a history of consistent monthly dividend payments and increases. The company's resilience during economic downturns, strong balance sheet, and diversified tenant base make it an attractive option for investors seeking passive income. Number 4. LTC Properties. LTC Properties is a real estate investment trust that specializes in senior housing and healthcare properties. The company owns over 200 properties across the United States, with a focus on assisted living, memory care, and skilled nursing facilities. As a dividend stock, LTC has a current yield of 5.5%, which is higher than the average yield of the S&P 500. The company has paid monthly dividends since 1992 and has a history of consistent dividend payments. In terms of financial performance, LTC has a strong balance sheet with a debt-to-equity ratio of 1.02 and a book value per share of $28.48. The company has also shown resilience during economic downturns, with a 99% rent collection rate during the COVID-19 pandemic. Furthermore, the senior housing and healthcare industry is expected to experience significant growth in the coming years due to the aging population, which bodes well for LTC's future prospects. The company has a well-diversified portfolio of properties, with no single tenant accounting for more than 4.4% of its rental revenue. LTC Properties is a solid dividend stock with a high yield and a long history of consistent monthly dividend payments. The company's strong financial performance, resilient rent collection, and well-diversified portfolio of properties make it an attractive option for investors seeking passive income in the senior housing and healthcare industry. Number 5. Dynex Capital, or DX. Dynex Capital is a real estate investment trust that invests in mortgage-backed securities, or MBS, and other mortgage-related assets. The company's portfolio consists of agency and non-agency MBS, as well as commercial and residential mortgage loans. As a dividend stock, DX has a current yield of 7.4%, which is higher than the average yield of the S&P 500. The company has a history of consistent monthly dividend payments and has increased its dividends for 6 consecutive quarters. DX has a strong balance sheet with a debt-to-equity ratio of 3.2 and a book value per share of $17.39. The company also has a low expense ratio of 0.5%, which helps to maximize returns for shareholders. DX has a well-diversified portfolio of mortgage-related assets, which helps to mitigate risks and provide a stable source of income. The company's investment strategy is focused on generating income through high-quality, well-performing assets. Dynex Capital is a solid dividend stock with a high yield and a history of consistent monthly dividend payments and increases. The company's strong financial performance, low expense ratio, and well-diversified portfolio of mortgage-related assets make it an attractive option for investors seeking passive income in the mortgage industry. As an investor, it is important to keep in mind that dividend stocks should not be the only focus of your investment portfolio. While they can provide a steady stream of income, it is also important to diversify your investments and consider factors such as growth potential and risk management. Now, here is a question for you. Which of the dividend stocks we discussed in this video caught your attention the most, and why? Let us know in the comments below. If you are enjoying this video and find it informative, please consider subscribing to our channel and turning on the notification bell. We regularly post videos about investing, finance, and other topics that can help you improve your financial literacy and achieve your financial goals. Now, let's get back to the video. Number 6. Prospect Capital, or PSEC. Prospect Capital is a business development company, or BDC, that invests in middle-market companies in the United States. The company's portfolio includes a mix of debt and equity investments, with a focus on providing capital to support growth and expansion. As a dividend stock, PSEC has a current yield of 8.6%, which is higher than the average yield of the S&P 500. The company has a history of paying monthly dividends and has maintained its dividends at $0.6 per share since 2014. PSEC has a strong balance sheet with a debt-to-equity ratio of 0.84 and a book value per share of $9.31. The company has also maintained consistent profitability with a return on equity, or ROE, of 11.2%. Furthermore, PSEC has a well-diversified portfolio of investments across various sectors and industries, which helps to mitigate risk and provide a stable source of income. The company's investment strategy is focused on generating income through high-quality, well-performing assets. Prospect Capital is a solid dividend stock with a high yield and a history of consistent monthly dividend payments. The company's strong financial performance, low debt levels, and diversified portfolio make it an attractive option for investors seeking passive income in the middle market investment space. Number 7. SL Green Realty Corporation or SLG. SL Green Realty Corporation is a real estate investment trust that primarily invests in commercial properties in New York City. The company's portfolio includes a diverse range of properties, including office buildings, retail spaces, and residential properties. As a dividend stock, SLG has a current yield of 4.4%, which is higher than the average yield of the S&P 500. The company has a long history of paying dividends and has maintained or increased its dividends every year since 2010. SLG has a strong balance sheet with a debt-to-equity ratio of 1.07 and a book value per share of $96.63. The company has also maintained consistent profitability with a return on equity of 6.1%. Furthermore, SLG's portfolio of commercial properties is well positioned in some of the most valuable real estate markets in the world. The company's properties are located in prime locations in New York City, which provides a stable source of income and long-term growth potential. SL Green Realty Corporation is a solid dividend stock with a moderate yield and a long history of consistent dividend payments. The company's strong financial performance, well-positioned portfolio, and presence in one of the most valuable real estate markets in the world make it an attractive option for investors seeking exposure to the commercial real estate sector. Number 8. Broadmark Realty Capital Incorporated is a real estate investment trust that focuses on providing short-term loans to real estate developers and investors. The company's portfolio includes a diverse range of real estate assets, including single-family homes, multifamily properties, and commercial buildings. As a dividend stock, BRMK has a current yield of 5.5%, which is higher than the average yield of the S&P 500. The company has a relatively short history of paying dividends, having only started in 2019. However, it has already demonstrated a commitment to maintaining its dividend and has increased it twice since its inception. BRMK has a strong balance sheet with a debt-to-equity ratio of 0.73 and a book value per share of $17.27. The company has also maintained consistent profitability with a return on equity of 8.6%. BRMK's focus on providing short-term loans to real estate investors and developers provide a unique opportunity for investors seeking exposure to the real estate market. The company's loans are typically secured by real estate assets, which provides a degree of protection in the event of default. Broadmark Realty Capital is a solid dividend stock with a moderate yield and a relatively short but growing history of consistent dividend payments. The company's focus on providing short-term loans to real estate investors and developers provides a unique opportunity for investors seeking exposure to the real estate market, and its strong balance sheet and consistent profitability make it an attractive option for income-oriented investors. Number 9. STAG. STAG Industrial is a real estate investment trust that primarily invests in industrial properties. With a diversified portfolio of over 450 properties located across 38 states in the US, STAG has become a popular option for investors looking to add stability and growth potential to their dividend portfolios. As of 2021, STAG has an impressive dividend yield of around 4.5%, and they have consistently raised their dividend payout each year since going public in 2011. In addition to their solid dividend payout, STAG has a strong financial position with a debt-to-equity ratio of 0.66, indicating that the company has a healthy balance sheet. Furthermore, with the continued growth of e-commerce and logistics industries, STAG is well positioned to capitalize on the increased demand for industrial properties. What are your thoughts on STAG Industrial as a dividend stock? Let us know in the comments below. And if you haven't already, be sure to hit that subscribe button and turn on notifications for more investment insights. Number 10. EPR Properties or EP. EPR Properties is a real estate investment trust that specializes in experiential properties. This includes entertainment, recreation, and education properties, such as megaplex theaters, ski resorts, and private schools. EP has a current dividend yield of around 5.5% and a long history of consistent dividend payments. In fact, EP has paid monthly dividends for over 10 years. Additionally, EP has a diverse portfolio with over 380 properties across 45 states, making it one of the largest experiential REITs in the industry. Its properties are typically long-term leased to financially sound tenants, which ensures a reliable stream of rental income. Overall, EP is an attractive investment opportunity for those looking for a high-yield dividend stock with a proven track record of consistent payments and a diverse portfolio. Which stock on the list is your favorite? Let us know in the comments below. And if you haven't already, Make sure to subscribe to our channel and hit the notification bell so you won't miss out on our future videos. And while you're at it, also check out the 6 best crypto altcoins that you should buy right here. This is Diversified Streams, and we'll see you on the next one.